Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points.
In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so what hedge funds and the big players in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is starting to create this inversion of trend pattern, which in this case is simply coming in a form of an inverted head and shoulders. In fact, we can see how this market is moving from the creation of lower lows and lower highs, so clearly a bearish structure and bearish trend, and switching to the creation of higher highs and higher lows. Now, in doing so, the market seems to be creating this inverted head and shoulders with the left shoulder here, the head here, and the right shoulder here. So in a situation like this area would be a potential reversal zone for the continuation to the upside and the creation of a new higher low, so higher than the previous low here, and then a new higher high, confirming this inversion of trend. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 50% and 0.618 Fibonacci retracements all lining up exactly in this area, which is also the previous support and demand from which this move to the upside was created, meaning that actually we have confluence of support and demand inside of this zone, increasing the probabilities of a potential rejection to the upside away from this area. Because when you have multiple layers of support in the same zone of price, that increases the probabilities that you will see institutional longing inside of this zone. And we will be speaking about institutional longing in just a few minutes when we move to the analysis of the commitment of traders. For now, let's drop down on the weekly time frame and keep that in mind. Now, from a weekly standpoint, what we can see is that the market is currently trending to the downside quite aggressively, and it is approaching a quite key area of price, which is this zone here, which was acting as previous resistance. Then the market broke it to the upside and the area was switched from previous resistance turn support here. And now the market is approaching this exact same area of previous resistance turn support. If the market will successfully reach this area, there is an increased probability of getting a potential rejection to the upside away from this zone, which would also create a rejection away from the monthly support that we have previously identified. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, the situation is quite clear. We currently have a bearish market with a bearish trend, currently creating lower lows and lower highs from a daily perspective. We can see already that 4 times the market has created lower highs, and we can see also that this is currently the 4th lower low. So clearly, we have a bearish trend from a daily perspective. Now, if the market will successfully manage to continue trading and breaking below this previous low here, at that point, a break back above this low could bring this market to create an inverted head and shoulders also from a daily perspective. Because when you have a bearish trend, so a market that essentially is creating lower lows and lower highs, then the market breaks back above the previous low, that is the start of an inverted head and shoulders, right? With the previous low here being broken to the upside, then the market creates a higher low exactly at that previous low, and then a higher high. That is the definition of an inverted head and shoulders. So there is a good probability here, since the market is currently correcting to this zone, if it will be broken to the upside, obviously, that at that point we could see a potential inversion of trend at this level. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the CHF, we can see how with the last reports, net positions have been massively decreased. We went from having minus 35k net positions all the way down to minus 49.7k net positions, which is one of the lowest net positioning that we had in quite some time. And in fact, institutions are currently sitting on the CHF with 56.2k shorts compared to only 6.4k longs, showing how they are massively positioned to the bearish side of the CHF. And keep in mind that all currencies on the spot are traded against the USD. So if institutions are massively short on the CHF, they are essentially long on USDCHF, therefore making it stronger. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily standpoint, as the market has broken above, if the market will break above this area and go for a retest, what would I expect? Well, first of all, as usual, trading is reactive and not predictive. So also until the market will remain below this level, it can easily continue lower. However, if we will see a break back above the zone after a break on the retest, at that point, that is where things get interesting. And as I was saying, since trading is reactive and not predictive, the monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.